All right, let's take a hard look at Palantir Technologies, ticker PLTR. As of this moment, with the market live and trading, the stock is at $185.55, and it is down significantly, falling $5.14, or about 2.7% on the day. Now, the immediate expectation, if you've been following the news, is that this makes absolutely no sense. The general belief, the narrative you're hearing everywhere, is that Palantir just reported on Monday one of the most staggering earnings reports of the entire quarter. A blowout doesn't even begin to cover it. The company crushed Wall Street expectations. Yet here we are, watching the stock fall, not rise. This is the tension, the gap between what you think should be happening and what is happening, and it's the entire story of this stock right now. The reality is that Palantir has run so far, so fast, that it delivered a masterpiece, and the market is still asking for more. It's a classic, brutal case of sell the news, compounded by a valuation that is making even the most bullish investors sweat. Let's get right into the recent action, because that's what matters. This 2.7% drop today isn't happening in a vacuum. It's a continuation of the weakness we saw yesterday, right after those stellar Q3 2025 numbers were released. The company reported revenue of $1.181 billion, which was a 63% jump year over year. That wasn't a small beat, it crushed the analyst consensus estimate of $1.09 billion. Adjusted earnings per share came in at $0.21, soundly beating the $0.17 expected. Most importantly, the part of the business everyone is watching, U.S. commercial revenue, driven by their new artificial intelligence platform, AIP, didn't just grow, it exploded. It was up 121% year over year. They raised their full year 2025 revenue guidance again, up to $4.4 billion. By every traditional metric, this report was a home run. So why is it falling? The first reality check is the valuation. This is the big problem that Wall Street is warning about. When you're managing your individual brokerage account, whether on the Fidelity mobile app or the SoFi trading platform, you have to look at the price you're paying. Palantir, even after this drop, is trading at an eye-watering multiple, with some analysts pegging it over 300 times forward earnings estimates. To put that in perspective, a high flyer like Nvidia stock, which is at the center of the AI hardware boom, trades at around 45 times forward earnings. Palantir is priced for absolute perfection and then some. The expectation was so high that even a 63% revenue beat wasn't enough to spark a new rally. The market seems to have priced in not just this quarter, but the next several years of flawless execution. This is what separates a momentum trade, perhaps on the Robinhood app, from a long-term investment thesis held in a Fidelity IRA's account. The second factor pouring fuel on this fire is external pressure. Just as investors were digesting this valuation, a new SEC filing dropped. It revealed that Michael Burry, the investor made famous by The Big Short, is holding puts on Palantir. A put is a bet that the stock price will go down. Burry is effectively betting that the AI boom, which has propelled both Palantir and Nvidia stock, is a bubble. This news sent a ripple of fear through the market. It was enough to prompt Palantir CEO Alex Karp to go on television and blast the short sellers, which only added to the sense of drama. So now you have a fundamental conflict. The company is posting otherworldly numbers, as Bank of America called it, while one of the world's most famous bears is publicly betting against it. This has created a civil war among analysts, and it's critical for anyone involved in online investing to understand this split. On one side, you have the mega bulls. Wedbush Securities reiterated its outperform rating, calling Palantir the best story in software and suggesting it's on a path to a $1 trillion valuation. Bank of America was even more aggressive, raising its price target to $255, calling Palantir a best-in-class AI enabler. They see the pullback as a buying opportunity. On the other side, you have the skeptics. Jefferies, for example, is holding firm with a hold rating and a price target of just $70. Their argument is simple. The valuation is extreme and totally disconnected from the fundamentals, no matter how good those fundamentals are. This is the kind of analysis that managers at Fidelity Wealth Management or those running automated Schwab Intelligent portfolios have to grapple with. Do you ride the momentum or do you obey the valuation math? This brings us to the central question for this stock, and I want you to weigh in on this. Comment below. Is Palantir valuation justified because of its AI leadership, or do you agree with Michael Burry that this is a dangerous AI bubble? Now let's go deeper into the reality of those Q3 numbers, because they are truly staggering and show why the bulls are so dug in. The company's U.S. revenue, combining government and commercial, grew 77% to $883 million. The U.S. government side, its old stable base, grew 52% to $486 million. But the U.S. commercial side, the new growth engine, was the star, up 121% to $397 million. This isn't just talk, it's translating into massive deals. They closed a record $2.76 billion in total contract value. They closed 204 deals worth $1 million or more, 91 deals worth $5 million or more, and 53 deals worth $10 million or more. Their U.S. commercial customer count grew 65%. This data shows that the AIP boot camps they've been running are successfully converting clients from testers to high-paying long-term partners. On top of all this, the company is a profit machine. It posted GAAP net income of $476 million. Its Rule of 40 score, a key metric for software companies that balances growth and profitability, was an unheard of 114%. This isn't a company burning cash to grow. It's doing both at an elite level. So what does Palantir actually do to generate these numbers? It's not a simple product like Apple stock sells. Palantir builds complex, high-stakes operating systems for data. Its original platform, called Gotham, was built for the U.S. intelligence community and Department of Defense. It connects massive, separate data sets to help analysts find patterns and threats. This is their sticky, foundational government business. Their second platform, Foundry, is the commercial version. It helps a corporation, like a pharmaceutical or manufacturing giant, integrate all its data, from supply chains to R&D, to make better decisions. But the entire story right now is AIP, the Artificial Intelligence Platform. This is the new layer on top of Foundry. It allows companies to safely use large language models and other AI tools on their own private, sensitive data. This is what's driving that 121% U.S. commercial growth. Companies are desperate to use AI without sending their corporate secrets to a public model, and Palantir is providing the solution. This is a very different business from buying Robinhood fractional shares of a consumer brand or even Robinhood crypto. This is a deep enterprise-level investment thesis. This complex story is why the stock is so divisive on all the major investing sites. For an investor practicing self-investing, Palantir presents the ultimate test. Do you believe the numbers or the price? The ease of invest online platforms, from Fidelity to SoFi Invest, lets you buy the stock, but it doesn't provide the conviction to hold it through this kind of volatility. Many investors who want exposure but are wary of the single stock risk might look to broader Fidelity ETFs or SoFi ETFs that hold PLTR as a component. For professional traders using interactive brokers, the volatility is an opportunity. with the interactive brokers trading platform lighting up with options activity, betting on both extreme upside and downside. This isn't a stock for a passive, intelligent portfolio. It's a name that demands constant attention. This leads to the future outlook, the final framing of expectation versus reality. The bull case, the expectation that reality will eventually catch up, is that Palantir is in the first inning of a multi-decade growth story. They believe AIP is the new operating system for the entire corporate world, and that the $255 price target from Bank of America is just a stepping stone. They see the 121% commercial growth and the 114% Rule of 40 score as undeniable proof that this is not Tesla stock relying on unit sales, but a scalable software monster. They believe that if you're looking for investment help, the answer is to buy this pullback and hold for 10 years.